Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, August 29th. We got the long weekend coming ahead here, Labor Day weekend. Hope you guys have great, outstanding plans. Be safe. We got a bunch of economic news to go over today, and we'll start off with the personal income for the month of July. So, back in June, we had a 0.5% increase in personal income, which, of course, we all like to see our income levels go up. So, the forecast for July was supposed to go up to 0.3%, and it came in a little disappointing at 0.2%. So on the other hand, we got the opposite of the spectrum where consumer spending for the month of July, we had a 0.4% back in June. Forecast was supposed to dip to 0.1 and actually even dip further to negative 0.1%. So it'll be interesting to see what August numbers will come out on this, primarily because people may have held back a little bit in July, waiting for back to school sales in August. So typically August seems to be a bigger month. So we'll kind of wait and see next month, see what August numbers were, because I'm kind of curious about that, and I think we'll see a little bit more of a spike there. We got the core PCE. So this is the Fed's favorite gauge for inflation. So this is actually an important gauge here. This is the personal consumption expenditures. We got that on the consumer level. We got the CPI and we got the PCE. But this is the Fed's favorite gauge that they look at. And when you see the numbers, typically you'll see the PCE, and then you got core when they strip out food and energy, which creates the volatility in there. So with that in mind, we had June of a rating of a 0.1% going up, and it stayed real modest at 0.1% here. So inflation so far is still in check, very modest. Still got to watch it. Obviously, we don't want it too low, but we need to bring it up close to the 2% threshold is where the Fed would like to see it going. Chicago PMI, this is the manufacturing numbers in the Chicago region. So anything above 50 is considered expansion. So obviously back in July we had very modest expansion at 52.6. Forecast is supposed to jump up to 57.5, and it jumped up a lot further at 64.3. So pretty big jump there from back in July, which is obviously good news for the Chicago region. Now we also got the which is the University of Michigan's they do like a survey, which is their consumer sentiment, see where gauge of where people are feeling. And the last reading back was at 79.2. The forecast for this reading came in at 80.1. The forecast, and it actually exceeded that. So all these are actually real important numbers here. So we have a mixed bag. Obviously, the personal income, the income, consumer spending was down. Core came in good. Chicago PMI, consumer sentiment were all good. So obviously the income and spending not as good, but the other three, good news right there. Let's take a look and see how the headline news are coming up here. Currently, the stock market is really kind of going at a standstill today. A lot of it is probably due to the hedge fund managers are up at their homes in the Hamptons and stuff like that. So expect kind of a slower day today, but they're going to probably close a little bit early, but be careful because it could quickly change. The market's up just a little bit. You're talking like less than 10 points, and that could easily change. And this could actually change because we got the Putin was lashing out Ukraine. UK also came out today warning of possible or likely terrorist attacks. So the long weekend coming up here, and typically they will pull money if the investors are concerned that something could happen over the weekend that could affect the markets. A lot of times they'll pull their money now and put it into a flight to safety, which is our bond market. So don't be surprised if that potential could happen just before the bell rings today. Right now, it's just we're flexing quite a bit today. We actually were up. We started at 102.20 or 102.30, I believe, yesterday. We've been fluctuating from between 102.27 all the way up to like 103 at one point today. So it's been really big fluctuations on the bond market. So right now, I would say we're kind of about even where we were left off yesterday. Yesterday it pulled back a little bit from where we did our recording in the morning, but so far it's about flat where we left off yesterday. All right, folks. Again, we could see a little bit better news later today, but otherwise, you guys have a long, safe weekend. Be safe. Hope you guys had a wonderful time. Enjoy it, and we'll see you guys on Tuesday. Thanks for watching, and again, I'll see you guys on Tuesday. Next week, we do got a lot of economic news to go over. Every single day's got some important economic news, especially on Friday with the job numbers coming out. All right, enjoy. Take care.